In headline terms, revenue was 40% up half on half. There's some comparisons back to the year on year, but that's less relevant. We've got a different pipeline now. Margins are up. We reported around 30%, which is great.
All right, welcome back inside our proactive newsroom. And joining me now is Rob Shepherd. He is the Chief Financial Officer for RC Fornax. And Rob, it's good to see you. How are you?
All good. Thanks so much, Steve. It's warm in London.
Yes, I've heard it's very warm there. Well, we're here to heat up an interview as well, and we're talking about your financial numbers for the 6 months ended February 28th. And overall, Rob, as the CFO, tell me where you think the company's at.
We're in a really good place. We had a tough, for those of you that followed us through IPO, we had a pretty tough FY25, particularly the second half of that, some issues around it. We've really addressed those now, and what we're starting to see is a real month-on-month improvement in our numbers. As you say, we put the report out at the start of the year, sorry, at the start of the week or 2 days ago. In headline terms, revenue was 40% up half on half. There's some comparisons back to the year on year, but that's less relevant. We've got a different pipeline now. Margins are up. We reported around 30%, which is great. We're seeing an improvement to the sort of higher end, higher margin outcome-based services. So all in all, there are obviously some issues to look at in terms of operating loss, given the cost base we have. But notwithstanding some of the macro challenges around uncertainties in relation to the uptick in defense funding, really, really positive and very happy to talk through those results.
Yeah, what are some of the numbers that when you look at, you think this is the health of a company and this is important numbers that we see increasing?
So I think a couple of those, we're looking in the near term at the month-on-month billing. And so I think we say through period, April billing was 3 times what it was in September. And that's really important, right? And that's obviously 2 months post the end of period we're reporting against, but that's then the entry number into the next period, right? So if you look again at the loss, we talk about, that was based on first half an average monthly billing of about 360,000. We're already 40% ahead of that. So that's where you start to see that build. And that's where we think is the important story here. There's a lot that you can look at history, but it's that building momentum. We've completely transformed the way we do sales. We're getting a lot of success in terms of converting that pipeline, and that's really what you're starting to see come through here. So it's that month-on-month growth. I think we quote something like 26% month-on-month growth. That's not in itself sustainable, but it shows we're really transformed where we were languishing to a degree in September. We're in a different place now in May.
Yeah, you alluded to the fact that the higher margin business is what you really need to focus on and sort of moving forward. And is that sort of the change that you were talking about? And while you're seeing numbers like this, and they will stabilize, but it continues, month over month is important.
Exactly that. And I think we show in the report that for the first half last year, our mix between what we call outcome-based, deliver focused on the objective as opposed to the input, sort of traditional time and material. First half last year was around 50%. So the sort of the higher margin type work was around 50%. It's now up north of 70. And so that shows that real desire to move up the curve. And it's what we've been saying since IPO. The company was founded by Paul, veteran of the RAF, worked as an engineering consultant and really focused on value for money. And that's definitely starting to resonate. It takes time because it looks on paper as though it's more expensive, but there's value add in that. We have internal project managers, we have an engineering team who can actually work with our customers and help deliver better outcomes, which is and you're starting to see politicians talk more about it, long overdue, value for money, outcomes based, and that's really starting to resonate with the people that we work with.
And the pipeline remains strong. Lots of things that you're looking at. Obviously, you can't talk about names or numbers or anything like that, but certainly the pipeline is strength is a big part of this in 2026.
Yeah, for sure. And there's, UK followers will understand the uncertainties around this thing called the Defence Investment Plan, which our bigger customers, the Babcocks, the BAE need that to move the dial. Where's the government going to refocus defence spending? But we did some analysis around existing spending. And if you look at the MOD, current spending, give or take 65 billion pounds, it's not difficult to look at the assumptions behind that, make some educated estimates. And we think there's probably £1 billion to £1.5 billion addressable market for us, right? And we're less than 0.5% of that right now. So we can sit and feel sorry for ourselves that the politicians haven't got their act together, or we can go after dislodging existing incumbents, helping customers understand that outcomes-based is a better way to use existing spend. And then obviously, as and when the DIP investment plan gets announced and some of those really big programs start to come through, that's really rather more than icing on the top, because that's a pretty big piece of icing. But the point is here, there's a lot to go after in the meantime. We're not sitting and waiting.
Okay. Are you happy where you are at in a financial position right now? And I know there's been investors are wondering, whether or not there's going to be a raise or anything like that, but do you feel comfortable where you're at right now?
Yeah, and I can understand some of the concerns, right? We IPO'd in February. We did a subsequent placing in December that was more punitive for all of us, particularly the CEO, who holds a significant share of the company himself. So that's understandable concern. People look at loss on paper or loss in a number and start to worry. But all I can say is focus on the growth. As I said earlier, that loss was driven by average billings of around 350, 360 pounds, £1,000 per month. We're already at 500 and we're growing that. So the more we grow that, the cost base itself is relatively stable. We arguably overinvested at IPO in people. We went from something like 8 to 24 people, fitted out a new office, and so that's largely done. So any increase in sales, that flows straight through. And we project forward on relatively conservative gross margins, and we're delivering ahead of expectations. But if there's any concern around that in the near term, nothing that we're aware of. Clearly, if we get some of these bigger opportunities come through, that can create some working capital challenges, but there are other tools to deal with that, invoice discounting and other means to help support working capital needs as opposed to investment needs that we don't see on the horizon.
Absolutely. Rob, thanks very much. Good update as always. Good to see you as well. And we look forward to continuing to follow things as they develop. Okay.
That's great. Thanks so much, Steve.
All right. There's Rob Shepherd, the Chief Financial Officer for RC Fornax.